financial statement. So let's see that. So financial statements are income statement, statement of retained earnings, balance sheet, and statement of cash flows. So financial statement, income statement, it tells us how well did the company perform during the year. And what is the formula for income statement? Revenue minus expenses. The statement of retained earnings, it shows why did the company's retained earnings changes during the year. It means how much additional retained earning is added in this year's in the beginning of the year due to this year's business operations. So the formula is beginning retained earnings plus net income minus the dividend that you paid or declared to be paid to the stockholders, and you get the ending retained earning. The next one is balance sheet, which shows what is the company's financial position at year's end. The next one is the statement of cash flows, which is how much cash did the company generate and spend during the year. So the formula is we have operating cash flows plus investing cash flows plus financing cash flow, and at the end you have either positive number or either negative number. The formula for balance sheet is the accounting equation, which is assets is equal to liabilities plus owner's equity. And now how the data flows from one statement to other. Number one, the income statement is generated. The income statement, you can find out from income statement the net income, right? And net income is used in retained earnings statement. What is the formula for income statement? That is revenue minus expenses is equal to net income, all expenses. What is the formula for statement of retained earnings? That the beginning retained earning plus net income minus dividend is equal to end of the year retained earning or ending retained earning, right? When ending retained earning you obtain, what is the formula for balance sheet? That assets is equal to liabilities plus owner's equity. And since ending inventory is a part of ending retained earning is a part of owner's equity, so you just add this amount into owner's equity. The last one is statement of cash flows. So you can easily find out the cash flow operation, cash flow from investing, cash flow from financing. This is plus and minus of changes in cash, right? This is how the information flows here, and at the end you can make your statement of cash flows, how much you actually generated the cash. Maybe you are earning a very heavy profit, but you don't have the cash. We'll see in our coming lectures what do we mean by accrual accounting and cash accounting. So this is the concept of accrual accounting. So let's discuss the first financial statement, that is income statement, which is also called the statement of operation, which means the statement which shows the business operation. So the income statement, or we call this IS, it reports revenues and gains minus expenses and losses. So bottom line of the net income or net losses for the period, which means the end result would be net income. So here we report revenue or gains minus expenses or losses. The bottom line would be net income. So the example of statement of income include, so we have 2011 and 2012. So we have consolidated statement of GAAP. What do we mean by consolidated statement? So the GAAP has different business segments. We're just adding all. So all the sales from different segment of the GAAP, the net sales here is in millions of dollars, which means $14,549 million. So it increased or decreased? You can see that increased, right? Sorry, decreased, because this is 2012, right? So what is the bottom line? Income, net income. So here, sales minus cost of goods sold minus operating expenses minus interest minus income taxes. So in simple words, revenue minus all kind of expenses is equal to net income. So we just segregated different kind of expenses here, right?